And there you have it. The markets are officially closed on this Friday, November 1st. Welcome, investors and traders. I'm AJ Monte, and this is a daily candle chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. Before I get into the forecast itself, let me just first point out to the brand new viewers on YouTube that these diagonal lines that you see on my chart here are past forecasts. So in other words, what I'm doing is each and every Friday, I make a price forecast and I draw these lines and I keep them in place for the record so you can go back and check on the day that that line was drawn. You can go back to the recording on YouTube and use as a reference or a guide to see how I've been reading the charts. Now, as a result of my using a simple checklist, it's a 7-point trading checklist that we make available to our members, I can weigh the evidence between the buyers and sellers and give you an idea of who is controlling the market at that particular point in time. And then we could draw our lines and trade against those target levels. So with that said, let me take a look at this candle right there. That is a shooting star. And if I zoom in a little bit more, you could see that today we filled the gap that was left yesterday. Now, if you're following my gap fill rules, you'll know that 80% of the time gaps fill, just like they did today. But after those gaps fill, there's an 80% chance that the prices will reverse and go the other way. So keep that in mind as we move forward into next week, which is election week. Now, last week, we talked about the ABCD pattern, and I said we have to wait for a pivot before we could draw point B, and then we'll have to see if it pivots back down from a point C. Let me review that for you so you can see exactly what I'm talking about. This pivot up top is A. And if you look, we had lower highs, lower lows, lower highs, lower lows, all the way up into this red candle where we did have a lower low, but we had a higher high. That is not a pivot. That's a half signal. The very next day, what did we have? A lower high and a higher low. That too is a half signal and not a pivot. Followed by lower high, lower low, lower high, lower low, much lower high. And now we finally have the pivot. There it is. Higher low, higher high. So from here, I could now draw point B. I do believe we can go up a little bit more to test this moving average as it's turning lower. You can see how it's starting to curve lower. And then once we get the pivot at C, we will go right back to a lower D, which will get us closer to my target line back here on the bottom left. So that is my forecast. I'm keeping that target in place right there at 411.32. Now, if I take a step back and look at the weekly chart, I'm going to do this only on the diamonds. You can see that we have a pivot forming on the weekly. Down below, we have a cross on the stochastic. That is a sell signal. Last week, we had the sell signal show up on the CCI, which is when that blue line there, which is the CCI, crossing below the 100 line, which is the sell signal itself. If it crosses below the minus 100, it's oversold. And then when we get across above, then it becomes a buy signal like you see back here. But we're far away from seeing a buy signal. And when you look at the weekly, you could see how this price target is not so far out of reach right there. I mean, we're definitely pivoting down towards that level, and our option traders are all geared up for that. Now going to IWM, you can see we got the pivot there as well, but going to the daily chart, you'll see that we are having a very hard time getting back up over that moving average. The drop in volume is telling us that the sellers got a little tired today and that we might see somewhat of another test of that moving average. I'm still keeping that downside target at 212.78. So that's IWM. Looking at the Qs, you're going to see a similar story. We have a bullish harami and a gap above the market. Now, I do think we will come back up on the Qs to fill that gap. But then I think longer term, as we get into November and beyond, we'll look at that downside target at 464.86. So we could see a little bit of a zigzag, but that gap right there is something that you want to keep an eye on, because once that gap fills, remember what I just said, 80% of the time after the gaps fill, prices reverse. And that's the same on the gaps that are above the market as well. Look back here, you can see the market gapped up. See how it gapped up there? And then what happened is it filled the gap right here and then reversed, right? Again, repeating, 80% of the time gaps fill. Then after they fill, we get the reversal. You don't have to take my word on that. Go back and look at any chart that has any gaps, and you're going to see that 80-20 rule follows in all of those charts. So that is the Qs. Again, downside target on the Qs right there at 464.86. Moving on to the spiders, which is the S&P 500 ETF, ticker symbol SPY. Same thing. I think we'll see a rally up to fill that gap, and then that whole area up here is going to act as a resistance point. I'm going to just put a little R right there. Now, if it turns back down from that 20-period moving average, you're going to see a series of lower highs followed by lower lows. And that is the definition of what a downtrend is according to Dow theory. So again, SPY, downside target still in place down there at 555.58. Now I'm going to show you the monthly chart on this one because this is pretty extreme. You could see that we ended November right there. Let me zoom in a little bit more. We ended the month of November with a bearish harami and a shooting star after a hanging man, and now we have a half signal here. I know it's only the first trading day of November, but we already have a lower high. If we get a lower low, there's your pivot point on the monthly, and then watch out below. Because again, the monthly, you're looking at that and you say, okay, there's my target. Is that really so far-fetched? I don't think so. And I'm not talking about the collapse, at least not yet. But we are definitely following the technical signals, and that's why our percentage of accuracy is so high. In fact, we're still tracking an 82% hit rate on all the equity targets that I put out through the rapid fire stock analysis session on Wednesday night. So best in the world target hit rate. And my goal is to help you get up there as well by following the 7-point trading checklist. Now, I want to talk about the VIX. Here we go. The VIX gapped up yesterday. Now, the gap rule on the VIX is slightly different. And how is that so? Well, because the VIX is an oscillating index. So the gaps on the VIX fill 100% of the time, not 80% of the time. So we have a bearish harami on the VIX. We have a gap below the market on the VIX. We got the CCI pivoting lower on the VIX. So I do believe you're going to see that gap fill probably early next week, maybe even by Election Tuesday. And then I think we're going to start heading right back up. So for those who are trading the VIX, that gap fill point becomes a beautiful entry point because, again, you get that reversal just like the equities and what I mentioned in the gap fill rules. So my upside target on the VIX is still at 2668. Now, I do want to make a quick mention on SLV. If you follow me on X, you'll know that I put my silver trades out, and we did hit my downside target here on silver right there at 25.49, and today's low was 29.48. So I hit that precisely when a penny lower. And now I believe we're going to see silver start to rally higher. Now I am back in. I made mention of that on X. Like I said, that I am 100% back into my silver position. I continue to buy physical silver and physical gold. If you look at the monthly chart on this, you're seeing a cup and handle that is in the process of forming a breakout. There's the brim, and we are trading above the resistance or the rim or the brim, whatever you want to label it. They're all synonymous. And now I think we're going to see silver starting to move up to the all-time highs of 50. If you take the depth of the cup, attach that to the breakout point, that's bringing you up to 45. But the short covering in this area here, I think, is going to be out of this world crazy. And I think we actually can go a lot higher than $50. So I'm not going to be messing around too much more with my silver. I've been parlaying that into a much bigger position. I'm going to put the parlaying strategy on hold and just let silver do its thing to the higher levels. Before I get into the geopolitical news, I want to mention again that we follow the 7-point trading checklist. If you want a copy of this, you can copy it right here from a screen grab. I give you full permission to do that. If you want to sign up for a 15-day free membership with Sticky Trades, you're more than welcome to do that. No obligation, no credit cards needed, no pressure at all. Just come on in and register, and then you could plug into my webinars. I do a good number of webinars during the course of the week. They're all recorded, so if you can't make them live, you could just go listen to the recording. Even put them in fast forward at 1.5 times speed, and you'll be able to understand me and get through them very quickly. Now let's get to some of the numbers. This is our national debt. This is mind-boggling. Last month, we took on $384 billion more of debt in just 1 month. Think about that for a second, folks. That is more than $1/3 trillion in just 1 month alone. This is the kind of stuff that collapses whole governments and cultures. And it seems like no one is even paying attention to this. We're on the brink of hitting $36 trillion in national debt, and the interest alone is now past $1 trillion alone in interest. So you're talking about financing a debt that's far surpassed the military budget, right? The U.S. military doesn't even spend that much. And so we are cannibalizing our tax-paying dollars. This is not going to last for much longer before the ultimate collapse. If you're ignoring this, then there's really nothing I can do. If you're not paying attention to the signals, then you're going to be on your own pretty much. But we are still making money on bullish positions, but we're prepared for longer-term bearish positions. You could ask any of our option traders. We're doing tremendously well. We're trading Bitcoin and Bitcoin-related products. We're trading the energy sector. We're trading stocks like Restoration Hardware and GameStop. We got a good position on right now, and we're keeping an eye on those charts. Now, in addition to the debt, I want to show you what Berkshire Hathaway is doing. They now have a cash pile that is a record $277 billion and climbing. And they've sold a good chunk of their Apple stake, and they are ready for a downturn. See, Warren Buffett and his team want to have cash available, so if the market collapses, crashes, or even just corrects, they'll have an opportunity to take that cash and reinvest it in the market. Next Tuesday, we have an election, and many of you are picking up on the news of these garbage comments and such. What bothers me more than anything is that the White House, and this is according to Associated Press, the White House is altering the transcript. And stenographers have protested against this, but they're changing the words in an effort to cover up the big blunder. Whether you're a Biden fan or not, you have to understand where this is leading us. If you can't trust the government on simple words that are spoken and how they're changing those words, or at least trying to alter those words for the record, then how can you possibly believe any of the data that's coming out from the departments that release this data? U.S. layoffs jumped by 160,000 in September to 1.83 million. Now, this is the second highest level in 4 years. Layoffs now. The monthly layoffs have increased by 540,000, or 42% over the last 3 years, as the labor market has slowed. Why is that important that you connect the dots and verify or confirm what you're reading on these reports? Now, keep these layoff numbers in mind as we look at what was released this week. The JOLTS numbers came in far below what the forecast was. You see here, 7.44 million. Way below what the forecast was and far below the previous report of 7.86 million. Now, that is not so bad when you're looking at the data because it kind of correlates with what we saw with layoffs and such. But if you look at this, the ADP non-farm employment change, this was far above what was forecast and way above what was previously reported. Now, that is what I am putting the question marks next to. How can you trust these numbers when the employment change is showing a dramatic increase, but the job openings are showing a dramatic decrease? And when we put that all together, and I'm going to come back to this slide, when we put that all together with the job shock that came out today, October payrolls had a huge miss in private jobs, and they go negative for the first time since 2020. Now, what is going on here? Let me just take a little time to explain. 12,000 jobs were created according to the report. However, private payrolls dropped by 28,000. So the jobs that were reported, although it was very slim, almost none, it was all government jobs. Now go back to what we see here. How are the non-farm employment change so high? When the jobs numbers are coming out in the private sector so low, how is this one coming so high? So there's your conflict. I've said this before, I'll keep saying it over and over. I don't trust the numbers, I trust the charts. Why? Because the number one tenet in Dow theory is that the market discounts all the news and everything that you're reading in these reports. So that's already being baked into the price action. Hence the reason why I trust the charts more than the data. Now, look what's happening to the GDP. The GDP is shrinking. You see that? We have a drop in the GDP across the board here. And if we get another quarter of this, we have a recession. But they're not going to report that as quickly as you might think. They're going to avoid using that R word at all costs. But look at the numbers. And then you wonder, how does this payroll miss come in so bad as a shocker? And then the Dow at one point was up almost 600 points. Now it's sold off from the highs of the day, but this is not bullish at all. One other thing before I get off these slides is if you look at the trade balance here, we have a big miss again. They came out with a loss or a deficit of 95.9 billion, but it came in at minus 108.2 billion. So if we were a business, if the USA was a business, this means we are not selling product out the front door. We're not exporting. That's not going to be good for the domestic companies that are building product here. We're not exporting. We're not creating revenue on that money. There's no tax revenue coming in on those goods sold. So we are basically bleeding from an artery here, and people just seem to be shrugging this off. All right, enough of that. Now let's go into what the jobs market suggests and how this is shifting. Consumer confidence is going to be shaken up when they see a weak job market. What is a recession? What's the absolute definition of a recession? Well, basically, it's when consumers go on strike. They see a weakening economy. They see their savings account dropping like a rock. So what they do is they get scared and they stop buying. When they stop buying, product doesn't get sold. When product doesn't get sold, inventories start to mount up in the warehouses. When that happens, companies have to lower their prices to make the product more attractive, and then those companies suffer losses because they're not profiting because they have to lower the prices. So it's a domino effect that will absolutely hit us very hard. Now, if you are following along at Sticky Trades, if you're following on my X page, or you're following the YouTube channel, or if you're following us as a member on Sticky Trades itself, you've heard me say this so many times. The crash that we will eventually see will be shocking. I think we're getting very close to that. I think within the next 2 to 3 months, what you will see, not just within our government and the economy and the world, I believe it will shock you. Be prepared. We have a plan. We have a strategy. This is one of the best years we've had with regard to trading and option positions in a long while. It's working very well. We want to help you make money on the way down. I had a friend tell me that his advisor said there's nothing he could really do for him to protect against the downside except move to cash. That is a bunch of malarkey. I'm telling you right now. If you have an advisor that's telling you there's nothing to do to protect, then I would suggest you find a new advisor or take over and learn how to protect with options, stop loss orders, using the 1% rule, collaring your position with options. There are so many things you can do to protect yourself. Don't be one of the sheep that gets led to the slaughterhouse when this thing comes crashing down. It will eventually crash. Mark my words. I stake my reputation on that. And with that, do not fear. Embrace this as an opportunity. Stick with us, and I promise you, you're going to be absolutely okay. And by the way, thank you so much for commenting and liking, subscribing, and hitting the notification bell on our page. It really helps us build the channel. We're coming up on 12,000 subscribers. We'll hit a critical mass point eventually, and then the subscribers will start to go through the roof. But right now we're building the channel thanks to you, and I really appreciate your watching each and every week. Have a great weekend, folks. I'll talk to you on the next video. So long.